this video, we're going to go over the Euro USD and pretty much a follow-up of post NFP. As you can see here, we had a big move down last week. But let's dive in a little bit and see what we're looking for going forward. So I originally made a video about this level being resistance, and also we had a big spike during FOMC. So you guys are gonna see a little bit of the trendline strategy that I use, and I'm gonna make a separate video on how to implement that strategy to be able to spot perfect entry points and exit points, and also so where you can gauge to put your stop loss so that you don't get hit prematurely in the market on your positions, and also kind of gives you an idea of where you can look to get into a trade and how long you want to stay into it, and so forth, right? So I'm going to do a separate video on that, but in this video, just going to do a follow-up on the Euro USD and what we're looking for going forward. So I'll start off with this trend line that I was looking at last week, and if I just take my tool here for support and resistance, I started off here at this bottom, and I had this trend line drawn out. So basically, we found some resistance here, and then we pushed way above this. Okay, 1.0911, and we kind of closed. If I zoom in a little bit, kind of closed above this. Right now, it did find some support initially, but complete washout of these. Anybody holding here longs or any longs here got completely wiped out by these two candles. I mean, it's a pretty big move. And one of the levels I was looking at is 1.08, which was this zone here. If you guys can see this this dotted line, call this a median level, which will be another video. I'll be explaining what these median levels are, how do I use them. That way you guys can see what levels to look at. But yeah, so we crashed right back down, and another trend line I was looking at, this resistance to support, you can see we gapped down, and this level here, you can see it found some resistance even though we gapped. A lot of traders probably on the small time frame or even on the daily time frame were looking for that gap to get filled, but of course found resistance, pushed back down, and now this candle here is looking indecisive, even though it's a bearish candle right now. It even attempted to get long, or I should say it attempted to put on some gains. It was a green candle for a little bit and then came right back down to where it's at right now. So where are we looking at going forward? So right now, if we were to make a move up, I would want to maybe put on a small short position up here, or wait until we get to this pivot zone right over here, and I'll show you why. Let's see, if I take my support and my resistance, I would want to wait till we get to this zone right here, potentially making a move down, and then continue this this up move, if I could find the right highlighter. So if we were to make a move all the way down here and start trending right back up. Right now, I don't see any trades to make. Right now, in between this trend line, which I would look at as resistance potentially, or a move down to this zone, this pivot zone, coupled with this nice trend line. You can see the support bouncing off of that resistance, bouncing off of that resistance again, and once it broke over, you can see how that perfect entry was right here. I actually took a long here based on this trend line, that perfect support resistance, and then it enabled me to get long over here and ride it up. Now obviously, once this is toward the end of the year, so once it started going sideways, I was just like, you know what, let me just take profit. And I also saw a potential divergence, which I'll get into in a second. So you can see this trend line right over here, and I would like to see a move further down. Now if we get a move further down, I'm going to look to potentially take a long here. Number one, because we have that pivot zone right over here. Number two is because we have this nice trend line going across and having confluence with that area. And number three, if I look at the MACD, this will be, obviously this is a low here, and if we get into this area, potentially it's going to be a higher low, which means the MACD is going to end up making a lower low, which would give us a what they call a hidden divergence. I call it a trend continuation divergence because basically that's what it is, right? You want to go with the trend and then potentially make a move all the way back up to 1.1100. So that's what I'm looking for right now. I'm going to stay flat and just pretty much wait this one out. There's no reason to rush into it and wait to see what the euro wants to do, whether he wants to continue down for the rest of the week and then bounce up, or potentially head up to this 1.08 level, fill that gap, and then maybe make a pullback, but that's yet to be seen. So let's take a look at the weekly chart. This weekly chart, and again, you can see how great these zones are. Again, I'm going to make a video on it so that you guys can see, take advantage of these powerful swing moves. But this median level right over here, there was nice support, resistance. Now we popped up back over it, and you can see it found nice support right there. Attempted to push much higher, and now it's finding itself below this. So am I completely bearish on this market? Not 100%, because I still want to see, if we're going to go bearish, I want to see the price start trading below this pivotal zone. And then I would open up the possibility to maybe hitting 1.01, or maybe finding support here and then continue up to make a higher high. So that's what I'm looking at right now. And there's also a chart pattern that I look at that I'll show you right now. Okay, starting from here and starting from here. Now you guys are probably thinking, like, what kind of trend lines are these? Like, this doesn't make any sense. This makes sense, right? Because you have that resistance, 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 and then you have this trend line that doesn't make any sense. But again, I'm gonna teach you a chart pattern that not many people know about or implement because it's hard to see. And if you kind of look at it, right, it's kind of a reverse wedge. You see how it starts narrow and it expands out. This is what it's called a megaphone pattern. It's something I learned from a video, from a book called The Encyclopedia of Chart Patterns. That book taught me a lot about chart patterns, specifically this chart pattern that I implemented over the years that has greatly benefited me. And it's one to watch out for because it's very powerful. So what happens is that when this chart pattern starts developing, it starts narrow and it starts expanding out more and more away from this upper trend line until it finds some kind of bottom, and then it explodes higher. And you can see that easily here, right? One of the things that it's kind of hard to identify the bottom is you would have to look at the daily chart, but usually when you can start seeing that this is potentially going to make a bottom and start making a huge run up is when you start seeing divergence on the MACD on a weekly time scale. Now in this case, there was no divergence over here, right? The market kept going lower and the MACD started going lower. So that didn't give me a huge indication to start buying long until we started making a bigger move. So after this breakout, I'm looking to see if we're going to bounce back and then continue higher up to this level. And one of the secrets of this chart pattern is that it usually makes about 50 to 62% of a move on a Fibonacci. And I'll show you that right now in a second. If I pull out my Fibonacci tool, I go from the very top all the way to the very bottom. Okay, you can look at these levels. I don't know if you guys can see this, hopefully you can. But once it made a big move up, it tried to go a little higher to this 55.9, pulled all the way back, stayed below the 50%, and now it's trading back below. You can see close to the 40%. So if we do find support in this zone, I will look to take a long potentially a long position right at this pivot point, and to see if we're going to make that move all the way up to the 62%. Now I know everybody looks at the standard Fibonacci ratios, 61.8. You got the 50%. You got the the 27% and so forth. But I round them out. I've been using it that way for many years, and it works out well. So 62% is what I would be looking at if we start bouncing from this zone, which would be a fantastic trade of close to about 600 pips or so, right? And let's take a look on the monthly chart. Now this monthly chart, you can see I don't really see a big pattern here other than a long-term wedge, and I can draw that out for you right now. See here and right over here, and which is pretty interesting because you find the support over here, support over here, over here, and over here, and found support basically down here where we took off from. So that's something to watch long term. Don't know, the market's not going to go straight up or straight down. You obviously got to take some breaks on big movements on the lower time frames, but that's what I see on the monthly chart, and that's why I'm kind of leaning now towards the bullish side, depending on what we see on that daily chart. Now the last time frame that I'm looking at is a quarterly chart, and you can see here again I have that broadening pattern that I learned from the book Encyclopedia of Chart Patterns. This is also a long-term bullish pattern, and you can see this is the start of it. Now this one is interesting because it's very long term. Obviously, the market's going to make all kinds of fluctuations on the lower time frames, but if you look below and you draw that divergence out, okay, you have a low and then you have a potentially higher low. I mean, that's potential for a big move, continuation to the upside. So we'll have to see what this market's going to do, but right now it's looking more on the bullish side, and to see if this move continues much higher actually. So I don't want to get ahead of myself. This is a very long time frame, so we have to look at the daily chart to see how this plays out. So looking back at the daily chart, that's what I'm going to look for. We have a nice support to resistance over here, and then if we fall back to this zone, I will look to attempt and hold this one for a new high. So that's it for now. That's my Euro USD analysis. The next video that I'm planning to make is how to perfect or how to use trend lines in the most unique way that most people are not using them. It's a very advanced technique, but I learned it from one other trader many years ago, I think more than 10 years ago, and he was a master at entries and exits, and it's something that I was able to implement in my own trading that has helped me to really get in strong positions without having to risk too much of a drawdown, which in some cases, in some crazy cases, I would have a 500 pip target, price target, and my drawdown was about 10 pips, and that's how crazy the strategy is. It's very advanced, but once you understand it, it's incredibly valuable and useful. As a matter of fact, I'm going to show you guys. I'll give you an example right now. Okay, so I'm looking at a trade that I took that helped me identify some good entry points. So let's say this, for example. This is a recent trade that I took back in September. So if I take the replay tool, okay, and I'm back over here, right? This is a solid low. This is an obvious low. This spike up here, I consider this the optimal high because it's much higher than this little wick here. I don't know if you guys can see that. So what I did, it takes patience, but if I take my support and resistance tool, okay, and I know there's also a median level here. It's kind of light, but I'm pretty sure you guys can see this. If I'm being patient enough and I see that there's potential divergence, Okay, let me take my divergence drawing tool. I see a support, or a low, I should say, to another low. And this here is also a low, potentially make a low low. I'm not going to be looking to go long because my long-term perspective was bearish. So I'd rather wait to see if this market's going to make a move up so that I can short it back down to the next zone, which would be down here, or uh, revisit this low potentially down here. Okay, so this is how it played out, and I'll play that for you right now. Okay, now again, it takes patience because sometimes it takes a few days for the market to reach that level potentially, so you can get long or short on the trade. So if I continue on, so you can see right here, I went short right up here, and my stops are usually about 100 pips. So you can see this about 58 pips of drawdown on this trade. Now my stop was all the way up here. Okay, so my stop is up there. We're still okay. And the way I would identify if I'm wrong or if I should stay in this trade or exit is if we close above this trend line. So we didn't close, so I ended up staying into this trade and let it play out. So going forward, again, huge move to the downside. I'm short up here, and then my target is down here at 1.08, 0.98. So we let it play out. Okay, the market does what it does, goes sideways for a few days. The market's going to fluctuate, try to get you off your game and make you believe, that you're wrong or whatever the case is, right? That's why it's important to get in your position, put your stops, and let the market do what it's going to do, because it's going to have all kinds of fluctuations. So we move on, and that was the trade. All right, so that's one strategy that I've been using for many years to identify optimal support and resistance levels using trend lines. So with that said, guys, that's going to be the video for now. If you enjoyed this content, definitely like and subscribe. I definitely want to grow this channel to give you guys the best strategies that I have acquired over the span of 14 years. And that way you guys can improve your trading tremendously and not have to worry about, what trade, how you should trade, or what is it that you're looking for, and things like that, right? Just to give you the best content and everything that I've learned over the past decade and a half now. So with that said, guys, I hope to see you soon, and I'll see you in the next video.